Happy Friday, traders. It's 8 a.m. Chicago time on the 6th of November, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. It is Friday, non-farm payrolls Friday, and we have a big release that just took place about a half hour ago. It's basically changed a fair amount of what I've expected for the session. So I've had to readjust my hypos, and we'll go through that in a minute. The point of these trader bites is obviously to talk about how we arrive at the conclusions that we arrive at, not just to focus on the conclusions themselves. The goal is to impart on you as much as possible the repeating and constantly habitual process of coming to conclusions that we trade on during the day. The U.S. economy added 271,000 jobs in October. This was the strongest pace of employment growth this year. It beats by nearly 89,000 jobs, more than the consensus forecast of 182,000. So the expectation was 182. We got 271,000. Unemployment rate dropped to 5%. This is the lowest since 2008. 5% is considered full employment by most economists. September was revised from 142,000 to 137,000, so September actual came down 5,000, with October just blowing the doors out of pretty much any report this year. The yields have spiked following the report, indicating a higher expectation of a rate hike, and after Yellen's testimony, with her basically saying it is the possibility of takeoff in December is alive and well. The U.S. dollar is up 1.21%, nearing its most recent highs. Gold is down 1.58%, followed by the euro, which is now down 1.42%. Fed's Evans came out after the unemployment report. He said that the October jobs report is very good. 5% unemployment is very helpful, but there's still a little slack in labor markets. At the same time, our neighbors to the north, Canada's October net change employment also beat by far, 44.4 thousand versus 10,000 expected. Unemployment rate dropped from 7% to 7%, expected at 7.1%. That's pretty much all the news there is today. I mean, there's some stock news, Valiant not being able to make a royalty payment and so on, but that's something you can easily find. As far as what's ahead today, we're looking at just Baker Hughes rig count at noon. The prior 775, and then at 2 o'clock Central, consumer credit expecting 18.0. Lots of ECB speakers overnight, and we're expecting Fed Speaker Bullard to speak here in 10 minutes on the economy and policy in St. Louis. And then after the market, we're looking for Berkshire Hathaway, expecting $2,720.60 per share in earnings. And then at 3:15 at the pit close, we're looking for Fed Speaker Brainard at the IMF panel on monetary policy. Let's switch gears here. So overall, yesterday, the expectation for yesterday was basically what took place here. The expectation yesterday, if you recall, was for the market to have a responsive push towards 2101. 2101 was the key figure to test. 2103.50 was that big NVPOC that we've left behind from July 21st. What the market did is it opened in an open auction right against the point of control being right here. Pretty tight open, but it resolved itself very quickly. It pushed through the LVN at 2101, which is also an MC LVN, and this looked like Hypo 1 was about to be blown out of the water. It pushed into 2103. There was a ton of liquidity on the offer there. Couldn't get in through 2103 quarter, and then it immediately had almost a 10-point rotation, a 20-point rotation down. Um, and then in our expectation, we were looking for a test of 2101, failure at 2101, and then for it to come back down and do what? Take out this double bottom that was left behind from yesterday or the prior day, Wednesday, and the day before, Tuesday. Both those days had a bottom at 2090.50, which is technically a weak low and a high probability of a break. And there it is. It took it out. The target for Hypo 1, the key target for Hypo 1 was 2088. And it got it. It pushed through by 4 points, 2084. Lots of chop here, and then we had a strong surge back up from 2084 to 2095.50, 11.5 points, and was looking for a mid trade here back to the IB low, but that didn't work out too well. It ended up pushing to the open and then falling back through and missing the IB low by a couple of ticks. Very tricky area back here yesterday, and then from there it was all chop. So yesterday Hypo 1 once again worked out. This whole week, actually, this is one of those weeks where Hypo 1 was on target pretty much every day of the week. That's not very common. The idea is that that's the highest expectation, but it doesn't mean that the market has to follow it. But it's nice to see. It makes things a little easier, although less aggressive. When Hypo 1 always works out, there are no surprises. So the trade is not as aggressive. As far as what we've done, so if I go back to Thursday the 29th, which is the first balance point after the big rally on FOMC, so we've got FOMC right here on the Wednesday, the 28th. Thursday was a balance day. The day after it, on Friday, was a balance day as well, trading within each other. Then we started Monday as balance this week, and then we broke out pretty strong to 2100 and held, and then we had our continuation move into 2110 and a quarter, and then have since then been retracing. So what I've done is I've drawn a profile that encompasses this entire area. I missed a bar here. Let's get that involved. There we go. That encompasses that entire area, so we can see what the auction has done, not only in price, which is shown in the bars, but also in the profile, in volume, where the participants this past week to week and a half have been participating in the market. You can see there's a very, very clear double distribution that's in place. And where is that double distribution cut off? At 2088.50, 2088.75. And that's that same area that we dealt with, that we targeted yesterday, which was the point of control, which has shifted actually. The point of control that we've been carrying for a while. Well, anyway, my charts I need to do a full download, but so what's important here is that we have a really tremendous setup right now with the market trading right in the 2084. So what we have done is cross through that 2088 area and are starting to approach this high volume node down here. So the big target below today is down here at 2081. The low of the non-farm payrolls is 2082, and we have a clear, very clear two distribution setup here, which gives us a lot of opportunity to measure how the market is doing. So the opening is is all about this morning's opening is all about watching what happens at 2088 again, and that's what I'm looking for this morning. Where do we go? Where do we go on the open? Do we get responsive? This is the non-farm payroll has essentially blown the my homework from last night out of the water, because it actually rocked us from one end of the distribution to the next. So here's non-farm payroll. It triggered at 2094.75 or so. There was a quick print up to 2097.50. Very odd print, in fact. If I show you this, so here this is showing me what occurred right at the non-farm payrolls. These dots are prints of 209 contracts or better, and you can see it's just printed up to 97.50. No bids or offers at that time. This is in a millisecond time frame, and from there it started to move lower. And you could see the non-farm payroll. You could see that it had no offers to work with. But the bids started coming in below at 2090, 2088, and then you can see the areas getting really bright down below. That's liquidity that's sitting at the bottom of the market, waiting to get hit, with the highest liquidity at 82, which represented the low. So you can see that the market's not able to break through this liquidity down here and started to shift up. And since then, the market has been just auctioning back and forth. So here's how the whole thing looks. Again, the dots here represent trades. The bigger the dot, the bigger the lots going across. And it's on lockdown right now on the lower end of the non-farm payroll range. But it was very odd to see that print at 97.50 immediately on the release. It took the system took the 271,000 print and bought just a ton, and then just got slammed, I think. Got slammed on the way down. So since they're not factoring in the fact that, as many have discussed, prints over 100,000 in the non-farm payrolls today are considered negative because they put pressure on the fact that we have a higher probability of a rate hike in December, takeoff in December. So the market sees that as a negative thing. The market ended up retracing all the way back to the scene of the crime and going to 2099. So you can see here, it just we took off from here, went down to 82, pushed all the way through to 99, and then have walked down. This is the real auction here. The move, the V-shaped move here, back to the scene of the crime. That is just a disruption of the auction that was taking place. This is the real movement that the market. This is the real participation in the market, as we see on the S5 book map. There was very little in the way of liquidity. Again, the lighter the colors, on this monochromatic chart, it's like an X-ray screen. The lighter the colors, the more liquidity that comes in. And you can see earlier on it was very gray or dark. And then as the market settled down, you had liquidity come in right in here. So once we get done with the upswing to 99, that's when we start to see heavy liquidity come in here, and the market's auction, the orderly part of the auction, resume. So again, that disrupts how I was seeing things before the number came out. But right now, what we're looking at is it's here it is, crossing the 2088. Very difficult to pinpoint how this is going to open and what the likely primary hypothesis is. The only thing I can say is that if it holds as 2088 on the open, then your key target is 97 above. That's the big target that we're likely to test. If it fails to hold that 2088, then your key target below is the 81, and that's what I'm gunning for. So if we open and we have responsive buying back into yesterday's point of control at 94.50, and the market fails back through 88, then I'm going to look for an area to get short, something to lean against, and my target's going to be this 81. The Fed high is at 79 right here. So there's a lot that can happen. The problem is it's non-farm payrolls and it's the end of the week. So the market often in these circumstances makes some pretty decisive moves early on, and it just goes dead after about noon central. Traders just leave. But today, given the configuration that we have with this double distribution and a clear double consensus on what value is, and we can see the market were participated in two very significant areas. Today is expected to carry, I expect the action to carry into the close. I don't think it's going to be one of these boring Fridays. I think there's a lot to factor in here, as opposed to, yeah, we got the number out of the way. We know what the mood is. Let's clean up, let's square up our positions and go golf. That's I don't expect that to be the kind of day it is. I think there's a lot to be done here. There are positions that are going to have to be hedged against Delta all day long, and I think that there's going to be a lot of turnover today. So a good day to probably stick it through a little bit, at least into the early afternoon. Primary hypothesis, no idea because I have no idea where this is opening, but it looks like responsive buying, the usual responsive buying back into 94.50, 97, 97 and a quarter for the MC point of control here, and then we would target 2103.50 above there. 2103.50 is key up here. Yesterday we stopped at 2103 and a quarter, so those are the big areas up top. Down below, if we do fail, then again 2081 is the primary, 2079 the Fed day high is the secondary, and then after that we have this gap open, this area of a gap right here to target. The probability of one playing over another is really unknowable, since we are right in this low volume node here. A lot can happen in low volume nodes, because low volume nodes represent a market discord with price. It is a price that is considered undesirable, and that's why there's no volume taking place there. So there's oftentimes what happens with low volume nodes, especially in situations like this where you have two very important high volume nodes, is the market actually gets stuck in here and starts filling this area in and trading the heck out of that area. If I see that that's what will happen on the open, then it is likely to be a very settled day, and it's likely not to go anywhere for the rest of the session. But early on, that's what I'm expecting. I'm expecting responsive buying back up, given where it's opening, with 97 and a quarter being the key target, the first target 94.50. If not, we break through the 2088. As I said, 2081 is the target, 79 and 74 and a quarter. Okay? I know that's a lot to cover. There's a ton to go over. I'm out of time though. One quick look. Look at this US dollar chart. Wowza. This is a currency basket, and it's moving like it's a treasury. So speaking of treasuries, look at the bonds. The bonds had a two-handle move, from the number. That's really huge for this product. The bond yields going up, bond prices dropping, and the market is very active. Very clear double distribution today on this number. And there's a lot to work through. So anything above 153.05 here is likely to target this 153.22 and then back to 154.04. Big opportunity there if you're watching the bonds. I'll leave you with that. I want to remind everyone we did have an AMA yesterday, an open AMA. The video has been posted on YouTube on my channel, on this channel that you're watching. You can grab it there. I'll have support tweet it out so that you can get a hold of it. Those of you who are registered have received it already. We could not get to all the questions. It was just a ton of really good questions, and it was basically a record for the number of questions to receive on an AMA historically for me, and I just could not get through it. I really appreciate the interest. I'm doing my best to impart as much um, knowledge that I have as possible, but we're constrained by time. It was an hour and a half, and that's just too long for a webinar. But it's out there, and you can watch it. Good luck to you, and have a great weekend. Take care.